Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Håkan Lagerberg, the CEO of Swedencare, to present. Please go ahead, Håkan.
Thank you so much. You can take the next page slide. Yes, we are active in the pet sector primarily, and the pet sector has been booming. Basically, has been growing ever since World War II, but booming the last 10 years, I would say, and definitely got an extra spike with the COVID situation. And why is that? Yeah, it is primarily that we have a different relationship with the pets nowadays compared to 20 years ago. Is that the pet is really a family member, and you would like to take as good care of them as any family member. And that has, of course, also spurred the fact that if you take better care of your pets, then they live longer. And if they live longer, then they get some age-related problems as the years go by. So that also has increased the demand for different products to help with that. And it's also the situation that 20 years ago, then perhaps you went to the veterinarian one time per year for a checkup. Nowadays, you don't really have the time for that. So you like to have products and other measures to help your pets. So without this check, and you basically go to your veterinarian when you have a problem. So that's why pet parents are interested in having products to make their lives better. And then finally, the predictions for the sector as such is really high, that it will continue to grow at double-digit rate, basically. And for example, the U.S. market last year was the first time it went over 100 billion in sales in the pet business, and that is predicted to nearly triple by 2030. Next slide, or two slides. Two slides. That one, that's good. Swedencare at a glance. Yeah, what is Swedencare? Swedencare started up as a one-product company early 2000, and with a unique natural product based on a certain species of algae that helped the oral care of the cats and dogs, and that's called ProDen PlaqueOff. And that was really the sole product in some different format that we worked with up until, I would say, 2016. And 2016 was really a transformative year for Swedencare. We listed the company in June, and then with the intention of taking an active part in the consolidation of the business, because at that point of time it was really fragmented, and I would still like to say that it is a fragmented business. So we as a company have always been growing and also growing profitably. So that's really the key features of Swedencare, is that we are very active in finding business solutions so that we can grow together with profitability. We are an international company selling in over 50 countries. We have 14 different small offices and some production facilities all around the world in 7 different countries. Main market is definitely the US. I will come back to that and explain the journey we have had the last 18 months when we made several acquisitions. We are around 250 people now, and we have products for pets, as I said, cats and dogs. That's the main focus for us, but we also have an equine range that we sell in select markets. We are a nutraceutical company. We do not market any prescription-based products, but however, I will explain later, with the latest acquisition we made, we do have a drug production facility now. And our sales have of course developed a lot now with the acquisition. So now we have original product is still a very important product and brand for us. This half year, we had around 1/3 of our sales with the ProDen PlaqueOff family. Then we have nutraceuticals, powder-based products, liquid-based products, and some tablets. And then we have dermatology products that is really an important sector for us now, primarily in US, but we intend to grow that a lot around the world. Also, coming back to the COVID situation, of course, that had an effect on the online sales for the sector as such, and definitely for us as well. So we had basically 50% of our sales online. If we're looking at 2020, now 2021, the physical shops and clinics have taken back some percentages, but still online is really important and an area where we are really active in growing. We have or we can take the next slide and I'll explain different brands a bit. Yeah, so as I said, the ProDen PlaqueOff at the left of this slide, it was really the start of the company. In 2016, we bought NutriScience, and that came both with a production facility and a brand, also equine products that was introduced to our company at that point of time. Then we made a couple of smaller acquisitions over the years from 2016 to 2020, I would say, and primarily in 16 and 17. 18 and 19, we didn't close that many deals, but in 20, we managed to acquire Stratford Pharmaceuticals, a company that we had been trying to acquire twice actually over the years. And that was really the perfect match for us, and why we were so dedicated in adding Stratford to our group. A specialized veterinarian company selling in the US, and in normal markets for us is really that we sell around 50-50 between pet retail online and veterinarians. In the US, we were heavily on the pet retail side, not so strong on the veterinarian side. So Stratford have come in and helped us with that. And then we've added a number of brands over these last 18 months, and I will present them a bit further. But as you see here, is that we have a really full range of nutraceuticals in all the major therapy areas, and we do have a strong pipeline of products as well. So we get into some more niche products, but that has a demand for the market. Looking at our sales, we, as I said, strong in the veterinarian sector, lots of different partners there. Pet retail, and then these last years, online has grown a lot. So we do have lots of cooperation with the strong platforms all over the world, like Chewy, Amazon, Wildberries in Russia, and Tmall in China, etc. And we really have taken an active part in handling that ourselves now. That has been our strategy, just getting a better control of the online sales. What we do also have the coming years is that we will focus more on also having direct-to-consumer sales. 2 slides. Sorry, one. Sorry, back. Sorry, Johan. Yes, just some short words about the different acquisitions we made. Stratford, as I talked about, a very dedicated company to veterinarians and online sales for veterinarians. Have a very interesting private label program as well, offering the individual veterinarian clinics and smaller chains to actually have private label products, so that they can be sure that their pet customers don't find the same product anywhere else, because that has been an issue in the US primarily. We added Animal Farm, a similar company to Stratford, actually based in Florida as well. And the reason for that is that Animal Farm is really a strong brand, having been sold in plus 20 years, and had a really special relationship, or still has a really special relationship with one of the major veterinarian distributors in the US. So with that acquisition, we really have a strong relationship with the three major veterinary distributors in the US. Then adding Nutravet, the number one nutraceutical company in the UK, with a very unique and strong product portfolio and an extremely strong brand and customer retention. So that is a brand that we are just in the phase of launching in a couple of other markets and starting off with some smaller markets in Europe, but and we also see an opportunity for Nutravet in the US. Next slide, please. Then Holden 2, and now we have renamed that to Pet MD Brands. It's really a fantastic company, small company, but extremely strong, only focusing online, selling to Amazon, Chewy, and also, as I said, starting to build up capacities for direct consumer sales in a different way than they have had really strong growth and are really experts in marketing and selling on the platform. So we have them as a let's say expert organization helping us to take their knowledge out in the world. So we have very successfully launched the Pet MD brand already in UK with Amazon, and are about to launch it in all of the 8 Amazon platforms in Europe, together with getting their expertise in how to market things there. RX Vitamins, very special, let's say more of a holistic perspective product company, also vet only basically, but have smaller customers compared to, if I would say, Stratford and Animal Farm, but also very interesting product line that we are developing now into some big private label opportunities, and also we see a very strong potential for RX Vitamins product line in the export. They already export in a couple of markets, but far from the 50 countries where we sell. Next slide, please. And then 1st of July this year, we acquired Vetio, a bit different kind of company compared to the others. All of the others were strong brand companies, strong product lines. Vetio is completely different. It's a CDMO, that stands for Contract Development and Manufacturing Organization. That is to say, they do not sell any products of their own, only business-to-business sales. And why we got interested in Vetio was really that they are the main supplier for Stratford. We have had very good relationships with them, and the experience from them is also that they deliver what they say. So compared to for some other suppliers that we've had some issues with getting product, primarily for a couple of the US-based companies, and that is of course related somewhat to COVID, but also due to the fact that the market is booming, and in the US it's really the producers market right now, and that led us to think about, when we were looking at our numbers and the all of the opportunities we have, is that okay, it's good that we know that there's a big demand from the market, but do we feel confident in having products so that we can grow in those percentages that we see in front of us? And we came to the conclusion that probably not, since the experience wasn't the best. So we started out looking at Vetio more from a perspective of securing product, being able to shift more of our group companies into Vetio production. But then also looking more at the company, we just saw that Vetio was in a fantastic position, being a CDMO. So we really think that business line is really interesting for us from perspective in growing Vetio as the number one CDMO, first of all in the US, and then of course we will also look how we can expand that into different markets as Europe and Asia perhaps. Then just short explanation of Video. The two different production sites, completely different, I would say. Video North, where actually I am right now. I'm in Canada, visiting for the first time, transatlantic visit in 1.5 years. So that's really exciting. So drug manufacturing in solid dose, that means tablets and soft chews, and also some non-sterile liquids. Really the focus here in 2020 and 2021 has really been to prepare and develop products for the customers. And the typical customers of Video is Video North is big animal health pharma companies and smaller animal health pharma companies looking at the generic market. That is a market that is really underdeveloped compared to the human side. Then we have Video South. That's really a big production site specialized in dermatology liquid products. But that was already before we bought them. A big add-on down in Video South is the big new production center that will be able to produce powder-based nutraceuticals and also soft chews. That is really a booming product sector for primarily dog products, and we have lots of opportunities there. 2020 sales for $32 million, and 2021 half year was 20. So you see there's a strong growth, but 2022 and 2023 is really when Video starts kicking in with the big manufacturing contracts for Video North. So there will be. My expectations is that Video is going to be one of the strongest, if not the strongest, group company when it comes to growth the years to come. Let's see. Then next slide, please. Or we can take one more, just to show our numbers then. Since we made so many acquisitions, it has been important for us also to show the trailing 12 months figures. So with Video, the group has sales of a bit over 900 million Swedish kronor with an EBITDA of 241 million. And as I said, going forward, we expect the group as such as having strong growth the years to come. And then we can jump to slide 18. Here we go. Priorities 2021. Yes, what we're working with right now is, of course, with all of these new group companies and all of these customers we have all over the world. It's really the integration of acquired companies. But I would like to stress that the acquisition model and the strategy for us going forward is really acquiring really strong companies where we see opportunities to help them grow. So we focus on sales and marketing projects where we can cross-sale between the group companies and really finding growth numbers with the acquisitions. We are not that focused in finding, let's say, cost savings initiatives, but of course, if they are apparent, we all naturally take them. But that's not the main focus for us. The main focus for us is really having a really entrepreneurial spirit within the group, having strong entrepreneurs managing the companies. So we wouldn't be interested in acquiring any company where the management team is not staying on and being really focused in growing the companies within the group. So we really have been successful in that, and that's one. Of course, the numbers needs to be good, but really the key issue I would say when we decide to make an offer or not on a company is really that we feel confident that the company has the same type of culture when it comes to management, have the same kind of let's say positive outlook, wanting to grow the business, not focusing on red tape or any other issues. So it's really important for us that we are very confident when we buy a company that they will be successful within our group, because that's really the key issue. It's the personalities of the management of the companies. Increased marketing, of course, when we grow, we have a very scalable business. We do have the possibility to increase the marketing spend, and we see really good return on that, specifically on the online campaigns that we do. Brand and product development, we have really strong situation now, especially when adding video with the analytical skills that they have. We do have a strong pipeline already within the group companies, but we will going forward from 22 and 23, there will be some more, let's say, group initiatives for product development. Distribution of full product range within different group companies. Of course, we won't have all of the brands everywhere, but it's important to see that we are very, let's say, diligent in looking at the opportunities we have in the different markets for our products that we do have in the group right now. And then, of course, handle all opportunities in various markets and channels, and that includes also, of course, M&A. I often get questions about that. We made lots of mergers and acquisitions, but I do stress that we are still open to adding successful and great companies to the group. So I do expect us to continue that trail. And next slide, please. And we did communicate the financial goals for the group, and that was sales of 2 billion SEK with a 30% EBIT by 2025, and we will we will look into this. Perhaps it will be revised, but that is something for the board to come back with. So, Johan, I made a quick presentation because I know you have lots of questions.
Very well, thank you very much, Håkan. So starting off with a few questions on the current sort of development, and starting off with you made a lot of acquisitions and increased your exposure to the US, where you have the stimulus checks now about to run out. Do you have any thoughts about how that could impact you?
No, not really. I don't think anyone knows really, but I've had some discussions here in Canada with the people here, and also of course from different. There has been some analysts and specialists talking about it, but we don't expect. We are in the a bit what I would say on the mid market and up. I mean premium products, and the expectations isn't that. Just that fact with the stimulus checks has affected the pet market that much, but who knows? Let's see what happens.
Very good. And continuing on a theme you commented during the presentation as well, that the current supply chain shortage is something that is affecting many industries at the moment, including yours. A question regarding visibility. How good visibility do you have into the next 12 months, say?
I would say for us, we have pretty good visibility. For us, it's really about shifting the actual supplier so that we feel more confident in the partner we're working with. So I would say that by end of this year we will be very comfortable and feeling secure that we will get the products that we need for the growth we expect. So I would say it's an issue for 2021. It won't be an issue in 2022 as I see it.
Great, thanks. And continuing on the Vetio acquisition, as you mentioned, a very interesting acquisition during the summer. We saw the acquisition multiple come up quite heavily compared to your historical levels, which is understandable given the business and the nature of the sellers as well. But how would you say that the current multiples in the market are progressing? Are you seeing any inflation in expectations for acquisition multiples among sellers, or how would you say that this has developed?
Yeah, No, I would say video is a bit special case for us. That was a lot higher than we have done before, but that's also the nature of the business that they have already signed manufacturing deals that we know will kick in 22 and 23 with big volumes. So that's really the most important factor for video being higher on the multiples. So we feel secure that the acquisition, looking at 22 and 23, the multiples will be a lot lower. But I would say that, of course, it's a very attractive sector right now. There's been lots of deals being made. One effect of why there's been so many deals this year, and I expect it to continue, is here in the US. Is really the business owners are really scared of the increase in capital gains taxes. There are lots of speculations about that from 2022, and that's really one factor. And then you could say that would perhaps mean that the multiples would go down, but since the sector is so attractive and the sector is having really good numbers when it comes to profitability, that hasn't really lowered the multiples. So I would say the multiples are higher. Attractive companies are getting higher multiples than compared to a couple of years ago. I wouldn't expect anyone to be able to make an acquisition single-digit multiples. Then I would say it's not a really attractive company, not a well-run company. So I would, but still, multiples around 10 between 10 and 12. That's what's expected. Then we've seen lots of deals now, especially in the US, bigger deals at a lot higher multiples. But yeah, let's see. Double-digit multiples is the standard right now.
Thank you very much, Håkan. Unfortunately, we are out of time. So I want to thank you very much, Håkan, for the presentation and everybody for watching. Thank you very much.
Thank you so much. Bye-bye.